Hello, everybody. Welcome to the Analyzing Finance with Nick Tariff trade special live stream. A lot of chaos going on in the markets right now. Um, the Liberation Day ended up being a lot more crazy than I expected it to be, and probably most people did. And today we're going to be talking all about it. I'm going to answer your questions and also just come up with my brief thoughts on tariffs. But really, before we get into the swing of things, I just gonna have to say a few disclaimers here. Nothing on this live is investment advice. Please do your own due diligence or hire an investment advisor to help you for any trades. I'm not going to be talking about specific investment ideas or trades on the basis of this. If just from compliance reasons from my end, if you want that kind of stuff, you could contact me directly through the form in the description that's linked into the description. So this is going to be more of a macroeconomics talk. But like basically what's going on here with, and I'm also going to answer questions because a lot of you guys wrote some questions in advance too. But yeah, let's basically what happened. So President Trump got elected on a platform to utilize tariffs. Secretary Scott Bessent, when he came on a platform to reduce the budget deficit to 3% of GDP. And tariffs seem to be part of that plan. Nobody really knew what to expect going into Liberation Day about what the tariffs were going to be. But but a lot of the more conservative estimates maybe were say like 10% tariffs on a few targeted countries. However, what we got was just a giant amount of tariffs on pretty much every country in the world except for maybe the Vatican. And their rates vary based on what the Trump administration calls like currency manipulation and trade risk barriers and other unfair dealings. And I was confused originally when I looked at the formula for this grid. And then the New York Post came out with a report that basically shows that they calculate the tariffs based off of trade deficits we had with each country. The exact formula really was pretty straightforward. It was taking the difference between what the U.S. imports and exports and dividing that into a fraction, and then with a floor of 10%, and then he cut it in half and called that the reciprocal tariff. Do I think this is the way to run trade policy? Absolutely not. It seems rather arbitrary, to be quite honest. And the other assumption really built into that, which I think is the most arbitrary part of it, is the idea that the U.S. should be at break even or a trade surplus with every single country in the world. It's one thing if you want to balance trade overall, like on the global level, you want to import the same amount as you export. And there are some data that is concerning. Like the U.S. is the only country in the world where trade or GDP has not been boosted by net trade. It's actually trade is a negative to U.S. GDP and it's become increasingly a negative of GDP. But the difference between I want to balance the trade deficit and that every country should have a trade deficit or a net U.S. surplus is very different, because some countries, they don't really have anything we want to buy from them, but can produce something themselves really cheap. Like the example would be like vanilla in Madagascar. Madagascar doesn't have a consumer society big enough really to be buying American products, but they can grow vanilla a lot more efficiently than anywhere else in the world. And so it's not really reasonable to expect us to have a even trade with Madagascar. They just don't need our goods. But buying vanilla from Madagascar is such a small percentage of the overall trade portfolio, it shouldn't really make a dent. So that's kind of like one example of this. The other thing is in theory, these are reciprocal tariffs where basically if other countries lower their trade barriers, the US will lower their trade barriers accordingly. The problem is it's really difficult to find data, like whether it's Trump's assumptions built in, which basically assumes if there's a trade deficit, there must be some sort of unfair trade practices going on, which I think is incorrect. Or on the other side, you see these astronomically low numbers for tariffs, which I don't think are actually correct either. And they don't factor in quotas or other things other than the stated tariff rate. Or maybe the weighted average tariff rate is low, but like the main product that the US would export to them is much at a much higher rate. So I think it's difficult to find really what the real numbers should be on this, but generally I think you've raised tariffs to the highest level in 100 years, and you're doing that without major tax cuts elsewhere, I think is net negative for the economy, at least in the short term. But that is also the assumption, though, that these are going to stay. If you look at the fiscal impact of these tariffs, uh, based on the rates of tariffs that they're expecting to raise, or 500 billion, let's say they actually get that. That's the equivalent revenue of raising the income taxes on every bracket by 26% on the federal level in the United States. I don't really think anybody in America voted for that level of fiscal tightening. And let's just say there's plenty of people who manage to work around the tariffs, and they collect half of what is expected, which is probably more realistic. Then that still has the same impact as increasing income taxes by about 15% across the board. And if you had um, a an income tax hike of 15% or 26% overnight, I think the market would have a similar negative reaction to what it did right now. It could be worse, but like to have this level of radical fiscal policy change, not even going in the geopolitical consequences of it, is going to have a negative effect on the economy and increases the probability of recession. Uh, the other thing is, how are other countries going to respond? Well, based on what I've read so far, a lot of countries have come to the table. Canada has been in talks to resolve all the non-USMCA tariffs. Same with Mexico. And I think really, in terms of a country, the biggest winner from this entire policy is Mexico. Mexico is going to be where a lot of the manufacturing moves because they benefit from the old NAFTA, new USMCA rules, but they have a lower cost, enough of a cost basis that it still makes sense to make some of the stuff that does not make sense to ever make in the US. Like those who think we're going to bring back the old blue collar factory jobs of Michigan in the 50s and the 60s, and that you're going to be able to make the equivalent of a six-figure salary just turning widgets at a factory because of these tariffs that's not realistic. That's not going to happen. Manufacturing is coming back to the US. It's going to be coming back through robotics and automation. Like a data center hires about, or a modern factory hires anywhere from 500 to 3,000 people. Let's just say you bring back 100 of these across, two of them in every state. So 100 of these across the country. That's about the same as 1 month of jobs prints. So that's just to put some perspective on what this means from a more quantitative perspective. But back to what other countries, and then you see the pesos has been faring relatively well on this news, and Mexican equities have fared relatively well too, because they are a relative winner on this, because a lot of industry and business is going to move down there because it has a similar EM level cost profile, but it's insulated from the trade barriers. India has mentioned that they're possibly going to negotiate, but nothing's really come out of that. South Korea is going through its own political turmoil, and they might order some negotiations. The EU has kind of been one of the more stubborn players in this, they haven't really come out to be open to really any negotiations. There's some countries like Italy and Spain who have, but the EU collectively has been a little bit quiet on this. Vietnam has been willing to drop its tariffs. Same with Cambodia. Israel has been willing to drop its tariffs, but that's a report that really doesn't have any sources confirming it yet. And Japan has also showed willingness to negotiate. The biggest players, though, from this tariff battle, China and the EU have been the ones the least likely to negotiate. In fact, China is the first one to officially retaliate by matching the tariff increase on U.S. goods. If you want like some more concepts, more details on what the administration's perspective in the most articulate way, and I recommend listening to Tucker Carlson's most recent podcast where he interviewed Scott Bessent. Like Bessent has a markets background and a hedge fund background, so he kind of understands a lot of like the economic flows and dynamics of this, and kind of can explain what seems to try to put some face of rationality to a lot of this. But like, if you want to get the best perspective from the administration itself, I would just be following what Bessent has to say on all of these kind of things. And and the interviews he said is really interesting, is that the main goal of these tariffs is not just trying to get everybody to lower their tariffs. I mean, I think this is a negotiation front. If I had to bet on it, I don't think these tariffs that were instituted on Wednesday will still be there at the same levels 6 months from now. They will be much lower for most of these countries. How much lower? That is to be determined. Some people think that the 10% part is just going to be is actually the end goal, and that's it's going to stick. You're just going to have a 10% tariff on most countries, and maybe some exemptions of a few allies such as the NAFTA countries, Australia, the UK, etc. Others think it might be higher, but it's really too early to determine that. The other thing that I thought was interesting that really that Bessent was commenting on is that a lot of these tariff goals are really to help try to rebalance the opportunities for the bottom 50% of the society, or really just the losers of the elephant curve of globalization. So in America, that'd be like the 10th to the 70th percentile of income. Like the bottom 10 was always dependent on social welfare. And then the top 30 benefited a lot from globalization. But that middle tier of people were big losers due to all of these developments. And he said an interesting quote, which is basically that you had a record amount of European vacations for Americans last year, but at the same time, you also had a record amount of Americans going to food banks. And that's kind of what they're trying to address here, is that like the bottom 50% of and 88% of stocks in this country are owned by the top 10% of Americans. And the bottom 50% are in debt and zero stocks. So like a lot of the shifting of the base to more towards the working class and the younger people who do not have as much assets, they are not as hurt. Like I'm surprised by a lot of comments of people surprisingly not caring that the stock market is going down among Trump's base. And they say, hey, that's a good thing. I mean, they're basically saying, screw the wealthy boomers so I can have a chance. And that seems a little short-sighted from my perspective. I mean, but again, the stock market is its own variable. There are plenty of reasons for it to correct anyway. Like the U.S. consumer was stretched before all this tariff stuff. No matter who won the election, I think there was going to be a recession this year. The catalysts this time are going to be Doge layoffs and tariffs. But if the other side won, it was going to be giant income tax hikes and likely increases in inflation from maintaining the pre-existing policies. So it was kind of a issue either way, to be honest. It's just a matter of how it was going to play out. And the other question I get is like, are tariffs, before I go to your question, the other comment I want to go to is, are tariffs inflationary? Because like the consensus is that, oh, tariffs automatically mean a lot of inflation. I don't think that's necessarily the case. When it comes to tariffs, the importers definitely are the ones who are paying. So if anybody's saying otherwise is kind of being misleading here. Like if you want to import something from a tariffed country, you have to pay it kind of like you're paying sales tax when you buy something at a retail outlet here in this country or on Amazon. That's how it works. The thing is, though, is that the cost is not immediately directly onto the consumer because there are a few things that can happen. One, the exporter can negotiate to reimburse some of the tariff or discount their prices to partially absorb the cost of the tariff. Second, the importer and the end retailer will probably have to cut somewhat on their margins, and then the remaining cost increase will be passed to the consumer. And whether that's a third, or 0, 0, 100, or 100, 0, 0 really depends on the microeconomics of each industry. So like the reason why you were able to see price hikes passed so much during like the COVID reaction in the 2021, 2022 was because you had a very tight labor market. You had a lot of stimulus money and Fed liquidity coming in and giving people a lot of cash to spend. So there was more money to go around and chase less goods. And so now it's a very different picture. You have monetary policy tightening. You are just being relatively tight. You have people's incomes kind of stretched, like people like credit card debts have been spiking, auto loan debt and default has been spiking, savings rates are pretty low by historical levels. So there isn't that dry powder for consumers to buy. It's like, great, you can rate the store can raise your prices, but if nobody's going to buy that, if there's no demand, they can't hold them at those levels. And the demand part is missing, which is why I don't think, at least in the short term and the medium term, like the next year, these tariffs are going to result on the net for a large amount of inflation. I think some luxury goods like French wines, for example, you probably will see most of that passed on to the consumers because those are targeting more affluent individuals who are less price sensitive. But the products cater to more middle and lower class people. They just, you can't squeeze blood out of a turnip. And also the other thing with inflation is 41% of inflation is housing. So, and the housing market is determined by mortgage affordability and rent affordability. So even if the construction costs for homes go up, it doesn't change the affordability calculation for the end buyer, whether it's the buyer of a house or the renter. And so as a result, there's going to be some costs going up maybe, but a lot of those costs are probably going to be eaten by the builders or through the sellers of real estate or the landlords. So it's not really straightforward that all these instantly get passed up. So now with when it comes to that's my opening thoughts on tariffs. And now I'm going to get started with your guys' questions. Before that, though, I just want to remind you guys we're having our next we're actually our next meetup in person tomorrow in Newport Beach. And we're going to be having our next ones in Texas at the end of this month, Dallas on April 25th, Austin on April 27th, and I'm heading out to New York on the 10th of May. So if you want to, and Philadelphia on May 12th, I'll put those in a comment after this or in the description. But if you want to see me live in person and ask me more questions directly, that's the way to do it. But now let's go on to your questions that you wrote for me in advance. And thank you guys for doing that. First, the question I have is, what are the main scenarios on the menu? Which countries have the biggest upside possibilities from this havoc? And how much risk of retaliation is on U.S.-based corporation foreign branches? Okay. So when it comes to the scenarios on the menu, I think the main scenario that is going to be negotiations. I think most countries are going to come to the table and negotiate to cut their tariffs. The thing that's interesting about this, though, is that it kind of breaks the liberal international order of old, where you can want to watch my video on the liberal international order if you want to see more of my thoughts on this. But it's the idea that the U.S. guaranteed defense, and subsidized a lot of countries' development and manufacturing capacity in exchange for reducing the probability of war and creating a bigger global market for trade. However, over the last 20 or 30 years, it's become increasingly unaffordable for the US to maintain this order by themselves. And they're trying to shift the costs onto other people. And Trump has kind of been the biggest advocate of shifting these costs, whether it's through pulling out or threatening to pull out of NATO, or just giving less defense commitments to European allies, and or these tariffs trying to rebalance trade so the U.S. doesn't have to have a giant trade deficit to subsidize the production of the rest of the world. This is probably as big of a shift in the economic picture as like what happened with Nixon removing the gold standard in 71, or the Plaza Accord in 85, or the original or China entering the WTO in 2001, or the original Bretton Woods in 1944. This is that big of a deal, really, in the big picture. It's realigning that America is no longer going to be the consumer of last resort for everybody else. And so this realignment is going to be tricky, depending on, because a lot of countries have built their entire models on exporting to the US. And those countries are going to have to adjust to either have their own consumers consume more or find other buyers for their products. Some countries, such as China, are so big that they're going to have to create their own consumption because there's just not enough people who have high enough incomes in the rest of the world to buy it. And China could do it possibly, because if you look at the raw numbers, the number of people who have like a developed economy level income, say like 30,000 USD or more in China, is about 150 million people, which is about the same as the middle class population in the United States, even though it's a much smaller percentage. But it's going to be a challenge for them to do that. And it's going to, in some countries, will have an easier time doing it, ones who are less export dependent. The countries the biggest upside, I think Mexico has the biggest upside. I think a lot of other Latin American countries have a significant upside too. But Mexico's because they have the cost structure of an EM country, but with the favorable trade deal, they're going to be a big source of onshoring. And then how much, what's it called? Okay. The other compliance, the other question really is how much retaliation risk is there for foreign branches? I mean, there could be political boycotts. Like Canada, you started to see a lot of uproar, but Canada's kind of a unique situation because they have a lot of their national identity in certain parts of their political spectrum is dependent on being contra to the US or just opposing US policy to stand out and develop a unique identity. But I think it could happen with other countries too. They'd be like, look, we don't like what Trump's doing and his tariffs are hurting our economy. We're going to protest by not buying US goods. I don't think foreign branches rebel within companies, but that's kind of the way it would do it. The next thing I would say for the question I have is, what chance do you think tariffs policy is going to work in the long run? As well as what extent short-term pain will be, if possible, to hold out for the long-term benefits. Well, the short-term pain is that this greatly increases probability of recession. That is that's kind of the main short-term pain risk, and whether it drags out to a longer. Like people cite Smoot-Hawley, which is the 1930 tariff that happened during the Great Depression. The key is that the Great Depression started over a year before Smoot-Hawley. Started in 1929 with the stock market crash and the Miami, well, not just Miami, but the Florida housing bubble busting, which I mentioned in that book, The Bubble of the Sun, goes into that story. So it did, it probably might have extended the Depression. But then you could also say the New Deal extended the Depression too, because the Depression basically was from 1929 to 1945, of 16 years of bad times. And speaking of that, I'm actually considering doing a series on the future on this channel about previous economic booms, like good decades, and like what distinguished them and why things work. 'Cause we always hear all the time on why the economies are bad. Like why did the Great Depression happen and why was it so terrible? Or why was 2008 so terrible? Or why was like the last 4 years generally terrible with inflation, or the 70s? But you never really hear about what made things work during good times. It's like the assumption built into our society that the economy is naturally good and it takes some intervention to make it bad. But sometimes there's actually catalysts that drive the good economies. I think I want to do one about the 90s and the 80s and the 20s and the 50s in the US, and maybe also the 2010s. And then for other countries, like I'd like to talk about, say, China from 79 to 2007, or Britain in the 90s, or Japan in the 80s. I think this could be an interesting series. So let me know what you guys think about that. But back to the question, that I think that I think they have, in terms of holding out for long-term benefits, they can realistically hold out maybe a year, in my opinion. Again, this is just me speculating though, because let's just assume that the midterms are gone. Like, I don't really see any chances that the Republicans are going to keep the House. And even the Senate odds are starting to scarily inch up for the Democrats in 2026. So, and if you look at Reagan, it's a good analogy for this. He instituted a lot of painful reforms in the beginning of his presidency, whether it was allowing Volcker to hike up rates to mid double digits for the Federal Reserve, and the recession that was as a consequence of that, and other painful fiscal reforms that happened in the early 80s. That lasted, and the markets didn't really bottom until 1982. The economy was still struggling really until about 1982, and then it took off for the rest of Reagan's 2 terms. That is probably the time frame, is that the president wants to have this economic pain start to go the right direction by the 28 election. And in order to do that, you're going to need to be able to resolve the things that are holding the economy back, I would say by sometime in 2026. Like, if you let this drag out too long, it could cause a lot of adverse unintended consequences, and also the economy may not recover in time to help your electoral chances. So if I'm looking at it from their perspective, I think that's the time that they can hold out. And yeah, the long-term benefits really, if there are, is that you have less of your federal revenues reliant on income taxes, which the US, despite having relatively low income taxes, has a bigger percentage of its tax revenue coming from income and payroll taxes than any other developed country. Most other countries make up from this from having a VAT, which is a value-added tax. And the tariffs are kind of like a light version of a VAT indirectly. But that's a tax on every step of the value chain that is how, like, it's kind of like a sales tax in a way, but they're generally much higher levels. And that's how they help pay for these much larger welfare states in countries like in Europe. And also the fact that they haven't had to pay for military for a long time, thanks to the liberal international order. But so that's one possible long-term benefit. The other thing is you have more geopolitical stability if you make a lot of your key strategic assets in the United States. I think the jobs benefits that people are hoping for, I don't think are there entirely. I mean, there'll be some jobs in terms of like repairing these robots and developing AI to help make these factories more efficient and operate data centers. But it's not the same as, like, again, having a whole company town in the Midwest relying on an auto factory like it was in the 50s. But yeah, hopefully that answers your question. But yeah, how this affects the global economy in the short term and the long term. Short term, as I said, yeah, it's going to be more economic pain, and you're probably going to see some holdouts. I don't think inflation is going to be as bad as people fear because of the lack of purchasing power consumers have. Long term, I think other countries in the world are going to adapt and rebuild their economies to be less reliant on U.S. consumption, and also maybe trigger other sorts of political reforms to make their economies more competitive. I think the rest of the world probably benefits a lot from this in the long term as a result of this. And in the U.S. long term, you'll have, I guess, more geopolitical stability and possibly more higher paying jobs, but it's too early to say. I mean, if they are able to tie this with an income tax reduction, like the proposal that the Secretary of Commerce Howard Lutnick has come out and said is like, we can, if the tariffs theoretically could finance a elimination of the income tax for everybody who makes under $150,000 a year. In theory, that would work if the tariffs raise as much as they anticipate it to. But the thing is that tariffs, as I've mentioned in my previous presentation about different forms of taxes I did back in December, can be worked around, and I don't think the amount of revenue they're going to raise is high enough that you're going to be able to do that. The next question is, who is going to absorb China's production surplus? Good question. I don't really know who's going to absorb China's production surplus. I mean, some of this Belt and Road Initiative is to help develop some of the surrounding emerging market economies so their incomes are high enough to buy some of this stuff. I mean, their own consumers potentially can buy some of it, but they have I think the biggest trade surplus of all time on an absolute basis for sure, and maybe even relative to GDP. And that's not going to be easy to fill. President Trump has said that tariffs will be manufacturing back to the U.S. How likely do you think, given the labor in the USA is much more expensive than other countries, how long do you think the U.S. market to appeal investors for this? I'm not going to go into the comments on the markets specifically, but I think that it really depends on the specific item and whether it's how automatable it is. And yeah, I'm getting a lot of questions in the live, which I'll get to. But after I do the pre-scripted questions, I only have a couple left. If you want to make sure your question gets answered, please leave a super chat, because it's going to be hard for me to go through all of them. So yeah, Shannon, I got yours, the super chat. And the question is, why is the risk this now? Most people voted for him to fix the economy. How does this work with liberationist economics? First of all, what do you mean by liberationist economics? If you can clarify that that would help. But yeah, a good question is, well, you want to risk this now is because you want to get the pain out in the first year of your term, because if you do it later, it compromises the midterms or the elections. So that really kind of explains the timing. Like, they have realistically 2 years to get all their policy reforms done. And then so if you want to do this, this is the time to do it, because there's the least amount of electoral consequences for doing this right now. And they're anticipating that within 12 months, there'll be a resolution one way or the other. And that hopefully will mean the economy will trending the right way into the 26 midterms. So that really explains why would they be doing this right now. Also, just in general, like in terms of a broader stage, why do this at all? Like, not just from a political cycle thing, is because a lot of people think that the current liberal international order is unsustainable and is dying out. And they cite things like the inequality, like the relatively high poverty rates in the U.S., how housing prices are at an average multiple that is relative to income higher than any time in human history, in American history. In other countries, it's been much higher. Also that you're just feeling like a lot of social contract issues. Like, I saw something that Gen Z men actually are more right wing than 70-year-old 70-year-old men, which the fact that that's the case is kind of a sign that there's kind of a let it burn mentality. And if you kept going the consistent path, and again, this is why I recommend reading Besant's or listening to his interviews, because he's better at articulating their thesis than I am, is you've got, like, generally a lot of people who are giving up, and you need to provide some sort of motivation for the younger people to participate in society. And that would be like a healthier domestic economy, and more like affordable cost of living. I don't know if tariffs are really the answer, and the way he's doing it, I think, is kind of arbitrary, but that's what they're trying to address. The bottom 50% of people who felt like they've been left behind and seem like there's some sort of effort there. But in terms of what's going to go back to the other question and the pre-scripted question, what they're going to do before come, like in terms of who's going to come back in terms of manufacturing, it really depends on how automatable your product is. If it can be done with robots relatively easily, it's going to come back quickly. If it can't, it's going to go to Mexico if it's going to go anywhere. But eventually Mexico's per capita living standards are going to go up where it doesn't even make sense to do it in Mexico anymore. And the robots might not be there to fill it. And I don't really know where that manufacturing is going to go, to be quite honest with you. But that is, the stuff that can, and a lot of the manufacturing robotics technology is pretty advanced. And a lot of even humanoid robots are on the way. And I've done videos about this, about Mobile Aloha last May, if you want to know more details about that. And the last of the pre-scripted questions I have is, how do you think the EU will respond? Well, it really depends if you think the EU is rational or not. Like they did show some signs of like being more conciliatory through promising auto tariff reductions like a few months ago to try to preempt this. But if you've seen like the more recent releases from what Ursula von der Leyen, which I think her name is, the leader of the EU, has said, is that, and Macron in France, is that they seem like they might be more willing to fight this. And I think the EU likes, from a political perspective and like an ego perspective, likes to take the role as like the vanguard against Trump and kind of be like the new resistance, for a lack of a better term. And if they let that get into their heads, they could drag this out for a while. But the EU's economy is even more fragile than the US. They have the demographic and structural problems that are motivating the US to do what it's doing now happened 10 years ago. So, I mean, I think they will come to the table eventually, but I think they'll be one of the last parties to come to the table. But now let's go to all of your guys' questions, because I've gone through all the pre-scripted questions here. And feel free again, if there's going to be a lot here, because this is a hectic topic, feel free to ask what you want. Super chat to priority, no specific stock trading or investment questions. If you want markets questions, just contact me directly, and we could talk about that privately. Are the tariffs good long term? I like the goal behind them, but I feel like even if bringing manufacturing to the U.S., deterring trade will offset the benefits. It depends on what the level of the tariffs are. If they're too high, it's going to be probably bad. If this tariff is like a negotiation tool to have more free trade in the long run, then it's a good thing. Like some countries are responding by getting rid or reducing their tariffs. That's a good thing. I generally am in favor of free trade as long as it's actually free trade and you're not just subsidizing other countries' manufacturing. And that's probably the model that's going to end, because the U.S. just doesn't have the extra capacity. When you have the inequality and the social problems we have in the country, that's a sign that the U.S. can no longer afford to really subsidize the rest of the world. It could have some marginally positive effects for the budget. I actually, in my video about how to balance the budget, anticipated like about 150 billion maybe in tariff revenue being added versus what the 550 that they're projecting from these tariffs. I just think at these current levels, it does more harm than good. But long run, if they're structured right, it could. But the thing is that tariffs are a tax. That's the thing you guys don't want to forget. Like, a tariff isn't some magical policy solution that's going to bring high-paying, low-skilled jobs to America. It's a import tax, which kind of functions as a light version of a VAT. And like any other tax, it's a net negative for the economy. But the question is, which taxes are the least net negative? Like if you're going to have the government at a certain size, if you're not going to pretty much cut all of Social Security and all of Medicare, you're going to have some sort of revenue coming in. And is tariffs a less painful way to bring in those revenues than income tax hikes? I think in general, yes, but like a 5% income tax hike, for example, would be better than a 26%, a tariff that's the same as a 26% increase in income tax hikes. And that's the problem we have right now, is that these tariffs in terms of their fiscal drag is the same as hiking income taxes by about 25 to 26% across the board. So you have to look at levels. Oh, how do you spell Scott Bessent's name? Bessent. Is Toastmasters paying off? Yeah, I think it is. I mean, if you noticed, I've been saying a lot less I think, in the live streams. So yeah, for those who don't know, I did Toastmasters for about 2 years before starting this channel, which has helped me with my speaking abilities. How long do recessions generally last? What are your thoughts on this recession? Quick bounce back. I mean, the average bear market lasts anywhere from 9 to 18 months in terms of like a stock market. Recessions, they usually last about 6 to 12 months. Like the 08 recession, which was abnormally long, lasted from December 07 to about like March 09. So that would be about 14 months. But that was a very deep one, or it might even lasted deeper into 2009. So if I'm wrong about that, feel free to correct me. But like, yeah, they generally last about like 12 months or so, or at the most. But some can be longer. Like the Great Depression, the first recession of the Great Depression lasted almost 4 years. But that's the outlier. And then there's others like the COVID recession, which only lasted like 3 months. But even though a technical definition of recession is 2 months or more of GDP growth contracting, the contraction was just so sharp during the pandemic that the NBER still counted as a recession. Whereas in 2022, when you had two GDP, Q1 and Q2 were both negative contracting, but since they're relatively small contractions, I guess the NBER didn't count that as a recession. So it's a subjective thing. But yeah, I mean, it really depends on how much of like the fat and like the structural bloating of the economy is allowed to clear. Like recessions where the market is allowed to clear a lot of the parts of the economy that had malinvestment and excessive pricing, you tend to have sharp bounce backs. If you have a lot of delays to prevent it from clearing, like 08 and the Depression and the 70s, then they tend to drag out longer. And you could just have lost decades, like in Japan, where they tried to paper over their losses by just printing money and doing more and more stimulus. And like the result is that it delayed what would have been maybe a pretty bad recession for a couple of years into a 10-year lost decade. So yeah, that's my answer to that question. All right. I think that money printing is inflationary. Everything else is price fluctuation. Do you have a different view? That's like the Austrian perspective, that increasing the money supply is inflation. And I generally agree with that. It just takes time for it to realize. And the reason why you see a lot of speculative booms and busts is because you have an uneven flows of that increase in the money supply. So like, for example, in the 03-07 housing bubble, you had all this money supply increase from easing monetary policy, but it almost all went into real estate. And so you didn't really see that much consumer price inflation, but you saw a lot of housing price inflation because that's where the hot money was going. Whereas in the last cycle, you saw a lot of it more go into consumer pricing because the stimulus was in the form of direct stimulus checks and extended unemployment benefits. So the inflation went more directly into consumer prices and relatively less into asset prices. So yeah, like it's just, I agree generally that increased money supply is the primary driver of inflation. I am just a college student. How should a college student navigate a recession? It depends when you're graduating. Like if you're a freshman right now, this is probably a good time to be in college because by the time you graduate, all this stuff will be blown over. If you're graduating this year, yeah, you're going to have a harder time finding a job. I mean, I could relate because I graduated shortly after the financial crisis and the financial industry was kind of not doing so well, not hiring young people from non-target schools. So I just had to work extra hard to kind of get my initial foot in the door, and it took a lot longer than I expected it to. So it's really about timing. Um, yeah. So that's my answer to you. The next thing is question I have is what about real estate and homes? Uh, let's see. I mean, if you're in the home construction business, this is probably bad for you because your costs are going up, and it's going to be hard for you to pass on those to consumers outside of very high-end wealthy markets because, again, the average consumer stretch in home affordability is already super bad. So yeah, it's the margins are probably going to be lower for for construction. In terms of buying a house, if you do see the inflation that people fear from the tariffs, that means people will have less money to spend on housing because the rest of their budget is higher now. And so that would mean housing theoretically would become more affordable because you have a lower bid. This is kind of what happened in the 70s when you had the baseline of energy, particularly oil inflation, go up and a lot of commodities, and housing prices stayed kind of flat in nominal terms, but they lost in real terms because um, the inflation that was going elsewhere in the economy, including wages. So that could be another scenario, really, for housing. But I wouldn't say it's necessarily. It's not entirely clear. Do you think Congress will be able to repeal his tariffs? No, they would need to have 66% veto override, and unless if this tariffs become just an unmitigated disaster and bring on the next Great Depression, I don't see the political will of 66% of Congress to be willing to do anything. Do you think what countries concede and why? Long-term risks. That's the next super chat question. Um, the smaller the country, the more likely it's to concede, basically. You've already seen some countries concede. Like there's reports of Thailand, Israel, Vietnam, um, Cambodia have all been willing to come to the table and drop their tariffs. So yeah, because if you're a smaller country and you rely on U.S. exports and you don't really contribute that much to the bigger trade deficit like Europe and China, I think they'll be more flexible to lowering trade barriers because you have a lot more to lose than the U.S. does from not trading with you. So I think smaller countries are the ones who are going to concede. And I think eventually most countries will come to a deal, but the larger countries are the ones with more negotiating power and the least likely to come to a deal, which is China, Japan, South Korea, and the European Union. So yeah, that's the answer to your question. A lot of left-wing media says that the tariffs will help the billionaire class, but I don't see the losses. Don't these losses affect the wealthiest the most? In terms of the stock market, yeah, definitely. I mean, again, 88% of the stock market is owned by the top 10%, and I think it's about a little less than half are owned by the top 1%. I mean, that sounds alarming in theory, but that's just almost a standard Pareto distribution where the top 20% own 80%, or the top 20% get 80% of the results, and then the top 20% of that get 80% of that 20%. And so, yeah, that kind of leads to it's almost a natural Pareto distribution. And yeah, they're going to get hit the most in the short term because their stocks are going to go down and corporate margins are going to go down. Like there's no way that these tariffs are going to hold and these companies are going to be able to completely pass on these costs to the consumer, especially since the hot labor market keeping wages up. And so that's that's what I think is like, theoretically Musk could benefit personally for automobile tariffs because he's primarily a U.S. auto company, and his competitors may suffer higher tariffs. But a lot of foreign auto companies manufacture a lot of their cars in America. Like Toyota has plants in the Southeast US, so does Mercedes and BMW and Volkswagen. So it's not as that either. But I think really the biggest losers really of the tariff are people who consume the most discretionary goods. And so, yeah, that means it's probably the upper middle classes are the ones and the upper classes who lose relatively more. But so I don't really see the idea of tariffs disproportionately benefiting the rich, unless if they think there's some cabal who just has a bunch of cash waiting to buy the stock market on a dip, and they have some secret inside information that that they're going to allow them to have an edge in terms of acquiring assets, which is just not really true based on reality. So, yeah, what's it called? If the U.S. is made its top priority manufacturing production in the Midwest, those 50s would even be possible or is incompatible with modernity. I mean, I don't think they could bring back manufacturing to the Midwest. I think there's plenty of heavy industry still in places like Wisconsin and Illinois and Indiana and Ohio. But the thing is that it's not going to be the jobs that you're not going to get your simple 40 hours a week cranking a widget and being able to send your kids to college. That's not coming back. That was a product of a world destroyed by World War II and the U.S. having the only ones with manufacturing capacity left and nobody to compete with. That's kind of what drove the 50s. And also the living standards in the 50s were not as high as people think they were. Like the average home size was half in terms of square footage as it is today. A lot of like basic technological access we take for granted didn't really exist in the 50s. Like sure, it was a higher probability of having a one income household, but it was not really the same like quality of life that a one income household, somebody who can afford to do that, has today. But I think the manufacturing will disproportionately come back to the Midwest because land is cheap there and they don't have water issues because of the Great Lakes. And they probably are bigger beneficiaries if there is a serious climate change issue. I'm not going to get into the climate change debate, but if it were to happen, that's probably a region that would benefit from it. Like it's already has in terms of agricultural yields. And if there's a severe drought or water crisis in the Southwest, that might cause a population to move back to the Midwest, and affordable housing might drive people out to the Midwest, especially at the age of remote jobs. But it's not going to be the same way. Yeah. All right. So, and it's funny. It's all with the left wingers who like with tariff. They tend to be the most anti-free market people normally, but they all of a sudden are the most capitalist people in the world when it comes to tariffs. And I'm saying this as somebody who's personally not a fan of the tariffs and think that the calculations that Trump did for his reciprocal tariffs are, I don't know, very dubious. But I just find that to be a funny example. Isn't Buffett the cabal in that example? No. I mean, Buffett has a disproportionate amount in cash, but I don't think that's because of some conspiracy. It's just because valuations have been relatively high in markets and he hasn't found anything attractive enough to deploy that money with. Let's see. Is the U.S. going to be able to fully reindustrialize and keep its reserve currency status at the same time? Also, is this reindustrialization necessary for Chinese/Russian threats? Yeah. So, yeah, I think there is some strategic concern. Like the pandemic exposed that we had a lot of things like medical supplies and emergency equipment and defense critical products that were dependent on supply chains in other countries. And that was probably a big driver, particularly like the fact that the semiconductor industry is concentrated in Taiwan, which is a very geopolitically sensitive place in the world. So that is, I think, driving some of this. But I think this is not entirely. I think this is a lot of it is an emotional reaction from the voting base who wants a halcyon days of um, relative income increases for the bottom 50% of the population. And we have seen those. It's just that it's too early in the process for people to kind of realize it um, entirely. Do you think the Fed will cut rates more than twice this year or remain on the 2 rate cut plan? If there's recession, they're cutting way more than that. And where they might do it in 2 rate cuts, but each rate cut will be 50 basis points or greater. Because if there's no recession, then there might not be any rate cuts. It's a very binary model. But assuming recession happens, I think they'll cut rates, and I think the floor for rates could be probably about maybe. I don't think they'll go below 2% on the Fed funds. I don't know what the exact floor would be, but yeah, there'll be a major rate cut if this goes to recession. Can you talk about trade deficits? Are the current balance by issuing treasuries to the nation which we have the imbalance with? No, not entirely. There's a few things. One, the trade deficit is not really as bad in one way because there are service imports. So say, for example, yeah, the goods trade deficit is about 1.2 trillion, I think, a year. But if you factor in services, that goes down by about 300 billion approximately. So 25% of it comes back through, like, for example, the US exporting financial services, consulting, legal services, like other things that or if I went on a tour to Europe, like that revenue, like stuff like that partially balances it. But the other side is capital flows. So it's not like the government has, I mean, there are some exceptions that are more top-down economies like Singapore or China where the government does have like more control of reserves. But generally these trade surpluses, what happens is that you have excess capital and that money can be used to basically be reinvested in the United States. So some of that is through treasuries. And that's where the treasuries comes from. Other people will use it to buy other things. They'll buy commodities, they'll buy US stocks, they'll invest directly in American real estate or private equity or things like that. So usually the trade deficit is usually equal weighted by the investment capital surplus. So if you have a high trade deficit and people no longer wanting to invest in the United States, that's when you have a problem. And in terms of whether the trade is less than reported, it depends. I think some people report the trade deficit with including services, and some sources do it without. So it really depends on the reporting. That's kind of my question. The other thing I was going to that answers a lot of my questions. I will keep going for at least another 15 minutes. If you guys have more questions, feel free to ask them in the chat. While I'm waiting for more questions, I'm going to remind everybody about the Analyzing Finance with Nick tour. Tomorrow, I'm speaking live in person in Orange County, California, if you want to come. And then I'm going to Texas the next few days at the end of April. April 25th, I will be in Dallas. And April 27th, I will be in Austin, Texas. And then after that, we are going to New York May 10th and Philadelphia on May 12th. And then after that, we will be going to Chicago, June 14th, DC, June 7th, and then Europe in the summer. So I will post the link of the full calendar into the description. But now I'll go back to answering questions. Whose export is an iPhone? Is it a Chinese export or an American export? Considering it's manufactured, shipped from China, but sold by a U.S. company. I think it counts as a Chinese export because that's where the product is made. but the capital flows count as U.S. profits. And the other thing is the S&P 500, approximately 40% of revenues are from international companies. So a lot of it is made up from American profits coming back into the country from them selling their products over to overseas markets. Will the dollar lose its status as the U.S. reserve currency? That's a complicated one. Usually, if you want to lose your U.S. currency, you need to have some rival power who has a currency that is viable to replace it. And usually, if you want to create a currency that is viable to replace it, you back it with gold or some other hard asset. So I don't really see any country who has enough gold reserves to really be a serious challenge. So unless the U.S. loses a war, I don't see them losing the currency. That actually goes to an idea that I've been reading that there's this idea of a Mar-a-Lago Accord that's going to be going on, and it's this idea that a lot of these countries are going to meet kind of like the Plaza Accord in 1985, where they're going to have a coordinated agreement to devalue the dollar yet maintain it as a reserve currency. That would help balance the trade without needing these tariffs, but it also mean reductions in U.S. living standards if they went to that, because a strong dollar theoretically is not a bad thing. It's a sign that your economy is doing well and people trust the strength of your currency, and it means your money goes farther when it comes to imports or traveling. But like since wages are lower in other countries, and the U.S. would need to have some other costs that are materially lower to make up for that. But the U.S. also has lower energy costs in other countries, and with the age of robotics, energy becomes a bigger cost than labor in some types of manufacturing. And I've also just posted into the chat the link to all the tour destinations if you want to see me in person. But back to questions. Now I got a flood of them. But the answer to U.S. reserve currency, no, I don't think it will lose them. For those who don't like the basis for the tariffs, since the middle class has been shrinking since the 1970s, what should do to help the average middle class America continue with the status quo? No, we can't continue with the status quo. That's why you're having all this political populism and why you have tariffs. The other thing with tariffs is why Trump is quick to use tariffs, because it's one of the few things the executive branch can do in terms of materially impacting economic policy without approval of Congress. Like, they can also selectively enforce regulation, but beyond that, like things like tax reform or other like economic stimulus, you need actual legislation from Congress, which is difficult to get through with the filibuster. So that's why, like, if your only tool is a hammer, you're going to see every problem as a nail. That's kind of that might be another motivator here for tariffs. But what else can we do? Well, that's the tricky part, because a lot of this is just really part of the demographic bust. And maybe the population going down through lower birth rates is the solution, in the sense that the higher cost of living is a market signal saying, look, like their labor supply is relatively too high relative to the demand of to the amount of goods and services that people can provide to live with them. Part of that's also but if you really wanted to, you need to reform the economy to be more rewarding for younger people, to be more motivated to participate, and also have more disposable income. I've talked about this in other videos, but I mean, things you can try to make housing prices more affordable through deregulation and having more, for lack of a better term, Houstonian zoning policies in other cities, and weaken the environmental lobby. You can encourage just more technological innovation. You can do maybe reforms about like cutting government spending and entitlements to a certain degree, so that you don't need to print as much money to compensate for deficits, and therefore have the price pressures needed to to make things unaffordable, but it's a very complicated topic. I mean, improving the education system is another one. Like the US education system is great on the university level and it's decent on the elementary school level, but middle school and high schools in the US are some of the lowest ranked in the developed world. And there's a major skills gap issue with a lot of people. And yeah, I mean, I think policies that will lower the cost of living and makes people more economically competitive are the solution. So it's a mix of deregulation and educational reform. But those are very complicated things, and housing regulation reform and environmental reforms would fix it. Yeah. So next question I have is, are the billions of dollars in the U.S. being invested worth the pain caused by tariffs? What are your opinions on the trade-offs? I mean, the answer is it's to be determined. I mean, I think it's probably a net negative, but what do you think would be worse? Damage to the economy, like a 10% tariff, which would generate, I don't know, or a 10% income tax hike. I mean, tariffs, I mean, are taxing hikes. That's essentially what they are. It's just, and the deficit, the old system with the deficit at 6% of GDP, whenever that goes above 5%, like what happened in Britain pre-Brexit, that's when things start to unravel a little bit. And this is a revenue option they see it might be more effective than raising taxes. We'll see. I mean, I don't know the answer, to be quite honest. Sorry, that's not a good one. How did you learn everything about global economics, and where should I start slowly getting confident in my understanding? Well, I work in finance for 15 years, so this is what I do for a living. And so I've read a lot of research reports, and I follow the markets every day for over a decade. I have a lot of conversations with people in my personal life, my business life about this type of stuff. I've worked at several firms, and the experience there helped me with that. I've read a lot of books on this subject. Like half of the books I've read in my adult life are finance or economics related. And I got a bachelor's degree in economics, and I did the CFA program. So I have a lot of like time I spent educating myself on these kind of things. And my channel is not like the go all end all, but it's a good starting point to dive deeper. But yeah, I mean, it's just, and then also traveling helped me a lot. Like I've traveled to several countries around the world, and just seeing like how things operate from their perspective really helped me develop a more global perspective. Also, when I did my semester abroad in Italy and took international finance and trade economics related classes in an Italian school, and seeing how other countries felt about US monetary and trade policy was also very insightful for me and helped me dive deeper into a lot of this. Let's see. In 2003, Buffett suggested a cap and trade deal for trade deficits. Is this thoughts? I mean, I saw that report, that link to that article he wrote, I think for Fortune magazine or something, just showed up in my X feed this morning. I don't know enough about it really to give you a good answer. Sorry, but how do you think these choices will impact diplomacy and global public opinion? U.S. exceptionalism, rose-colored glasses, and the American dream seems to be fading. Well, I mean, global public opinion has already been pretty negative of the U.S. Generally, when you are the top country in the world, people are going to have negative opinions on you, barring a very transcendent leadership, and especially with Republican presidents. Like, I don't really, at least in my lifetime, I haven't seen a single Republican president who's had a positive public opinion about him in modern American history, especially in Europe. So a lot of it just has to do with Trump's personal unpopularity and how he kind of represents the vulgarities that are common stereotypes for Americans overseas, makes them especially unlikable on that sense of the world. But yeah, a lot of this will probably hurt U.S. international credibility, in the sense is like you have this president who's going to arbitrarily change the deal that we thought was working pretty well. And what's to stop the next president from overturning it or doing something completely different or doing something even more radical? And that's the big risk also with this. If like all these tariffs fail, you could possibly have an FDR style wipeout in 2028 where you have the socialist wing of the Democrats just come in and create the 21st century version of the New Deal. And it'd be conveniently like 96 years after the last New Deal. And it could really change the trajectory of Europe America to have a more European like economic model, for better or for worse. I personally think that wouldn't be that great. But so I think there is a lot of risk. Like this isn't like some thing that you're going to easily be able to walk back. You're basically decide we're going to create a new economic model for international trade. And Trump kicked it off, but it's now the whole world's responsibility of how this is going to be built. Yeah. Are there any industries that may be winners of all this? So domestic manufacturers, robotics, those are kind of winners. But I'm not going to get too into details really because I'm not going to go into civic investments. Let's see. All right. What is the Orange County book always behind you? And was there a reason why you display it? Well, it's called Made Orange County Inc. And it was made by one of the writers of the OC Business Journal. It's a great book. And unfortunately it's out of print because a lot of people have asked me about it. It's about a profile of all the great entrepreneurs who started a lot of big companies. A lot of them are famous publicly traded companies today from Orange County. I mean, people think of San Francisco and Silicon Valley when it comes to California entrepreneurship, but Orange County may not be as tech focused, but it's also been a very big hub of entrepreneurship. This place, like 100 years ago, was just all orange groves and a few small beach towns that had second homes for people in Pasadena. And now Orange County is one of the most prosperous places in the entire world. And yeah, I don't know. I just think it's a good book and it fits the shelf. I have my other books and the board game Diplomacy also displayed here. But yeah, I mean, I don't know, as my bookshelf expands, and I'm reading new big coffee table size books, I might rotate it, but there's no real reason I put it there. I just think it's an interesting book and it gets people like you to think about it. So that's the answer to Orange County Inc. Let's see. Do I have? All right. Can you talk about an impact on Japan and the U.S.? Japanese companies dominated S&P 500 40 years ago. Now the Japanese economy is looked on downward. Was that an example of a smart trade war? Well, I mean, the thing. First of all, Japanese companies were never in the S&P 500 because it's U.S. stocks, but Japan had its own boom and performed really well. And Japan held its currency down at levels that were way too low given its level of economic development. And the result was allowed them to gain a disproportionate share of global manufacturing. And the rest of the world, the reason that worked, because it wasn't just the US, the rest of the world agreed that this was an issue. And also Japan doesn't have any sort of national defense. So they didn't really have as much negotiating power. And so they came to the table. And even after the Plaza Accord, the Japanese boom lasted another 5 years after that. So it's just a lot of structural excesses built during that time were going to come to roost eventually. And then there's the demographic. Japan was the first problem to go through the demographic bust. And so that's, yeah, I mean, I think that, yeah, Japan relative power dropped because of that. But yeah, I mean, and I think it's a successful trade war. I don't really know if it's a trade war. It's just a kind of an agreement. But yeah, the dollar went down a lot too. That was also the peak of the USD overall. And it didn't stabilize until the early 90s. So I think that the Plaza Accord is kind of the template which a lot of Trump's economists, I think, are trying to get at for this level of tariffs. Hey, Nick, what is your philosophy on life, and what character should one do for a good life, and common pitfalls that lead to failure? That's a very deep question. One day I might write a book about just my overall philosophies on life and different corners of things. I've written one already related to politics, but I haven't done it for other corners of society or life yet. But yeah, I mean, my ethics are based on my Catholic faith, so that is a big role in it. But yeah, common pitfalls for failure is just short termism and not thinking ahead for things in general. Like, I always tend to have a longer term chess player mindset. But yeah, and also integrity. I really think, like, not just always telling the truth, but just living in a way that is reflective of your values and being consistent. So that is, yeah. So do you think there is a possibility of deflation given the average household stops spending discretionary goods? Yeah, I think so. I think the tariffs could be deflationary because there's just not enough. The consumer stretched as it is, they don't have enough income to pay for these increased costs. So yeah, and a lot of the stuff that we import, if you look at the import portfolio from China and Europe, it's a lot of it is discretionary items like sporting goods or luxury cars or French wines or like toys or alarm clocks or video game consoles or things that you don't necessarily need to live. So it might just result in a reduction of consumerism instead of necessarily just people buying the same amount of stuff. Yeah, and then Bounce House's comment. Yeah, don't worry about me being a hyper monetization YouTuber. Like, I've gotten a lot of sponsorship offers, but like, other than my own company, I don't really think I'm going to be planning, unless if it's a perfect fit that lines up with like my personal ethics and like the stuff that I think you guys would benefit from. I think I'm unlikely to take random sponsors on this channel. I can't say it's 0%, but it's very low. Like, I have my own real business. YouTube is not my primary source of income, and I don't think it ever will be. So don't worry about that. I mean, the tour is more just my chance to meet you guys, and kind of, it's been something I've wanted to do personally, is go on a speaking tour. Now I have the audience for it. My real business is I run a wealth management firm here in Southern California. And that's why I'm not going to answer the guy's question on Bitcoin and GME, because I don't talk about specific trades on these live streams. Yeah. And then what do you think about Trump's economic team, Bessent and Miron? Well, Miron is the guy who's kind of the one proposing this Mar-a-Lago Accord. I don't know him well enough to have a strong opinion, but I have a very high opinion of Bessent. He comes from a markets background. He worked under Stan Druckenmiller. He's one of the great hedge fund traders of all time. And Soros. He understands like what's going on in the economy from the perspective of a markets practitioner. And I think he does a good job of explaining the administration's goals and like the bigger picture reasoning for it. And in fact, I recommend watching his interview he did today with Tucker Carlson if you want the perspective from the administration side on the tariffs. I mentioned that earlier in the live, but you might not have been on there. Let's see. Next question, really. I found your channel researching for an essay about the precariat. Loved your video. Do you recommend an economic inequalities the roots of more society's problem? And do you know of Gary's economics? I've learned of Gary's economics because a lot of you guys have recommended me to him. He seems to have more of a socialist bent. So we probably have a little bit different economic philosophies. I might be interesting to talk to him on his channel or on mine one of these days. I've just been kind of busy and haven't had a chance to reach out to him. But when it comes to inequality. I did a video called "Inequality is Not a Problem," and yeah, and so I think that inequality is more of a symptom than a cause. There are structural issues that cause the inequality. And also, inequality can also just be a product of prosperity. So if you have asset prices going up because of a more prosperous society, but only a small chunk of the population owns those assets, your inequality is naturally going to go up. Like, I bet the inequality data is going to look a lot better after all these tariffs, simply just because the stock market has gone down. So, and every time inequality has gone down, there's a book called The Great Leveler. It usually means something bad happened, whether it's a war, whether it's a famine, whether it's a revolution, or like an economic depression. So I don't think inequality in itself is the problem. It's more, you have to look at it's a symptom of that there may be something wrong, or it could just be a sign of prosperity. Yeah. Let's see. After Trump's COVID M2 expansion, Biden didn't really do anything that slowed it down and kept it going. Why did he encourage a Volcker style action to slow inflation down? No, I don't think Biden was the one who encouraged it. I mean, Jerome Powell did it on his own. The Fed is independent. The Fed doesn't have to listen to what the president says, whether it's Trump or Biden. The Fed saw that inflation was getting out of hand and they were a little late to the party, to be quite honest. And so they raised rates. And if they didn't do that, we would still be at the same levels of inflation, especially in housing. Housing would have hyperinflated, I think, in my opinion, if Powell didn't do what he was doing. So, yeah, the Fed is independent. That's the answer to that question. Do you consider your business to be a hedge fund? No, I used to work at hedge funds, but my current business is not really a hedge fund. We do separately managed accounts, and it's mostly long only, except for more higher risk clients. How about Peter Navarro? I mean, I've read some of his books. I think he's a little bit too hawkish on China, but he served a role to make in this during the first administration to make a lot of good points about some of the some of the structural risks that we had due to our trade balance with China. He's known as the strongest of the tariff hawks. That's his reputation. Let's see. I'm probably not as pro-tariff as Peter Navarro, probably not even close. Let's see. USD has moved positive just about every currency today. Do you think this is just because of cash flowing the dollar for safety or a positive sign from tariffs? Well, I mean, the dollar had rallied a lot already in anticipation of tariffs for months on end. If anything, I think that I'm not going to go into my opinion on really on the future of the dollar, but I mean, I just think that's now just the dollar's just kind of reacting to just capital flows and people having to sell things. Let's see. Do you think media and countries will start to wake up and realize globalization is over regardless of these tariffs? If anything, this tariff news might be the peak of the deglobalization trend that started in 2014, 2015. If anything, I mean, I think deglobalization, at least in the economic and financial circles, has been a well-discussed thing since Trump got elected in 2016. This isn't really new. Yeah, do you support ending the Fed? I mean, in my younger days, I did. The thing is, I would support ending the Fed if you had a actual plan to replace it and make sure that Congress couldn't take its place. Because the problem I have now with ending the Fed is that if you ended the Fed, what you would have ultimately be the replacement is Congress directly doing monetary policy. If you had a hard gold standard and you had just interest rates move directly with the market, then that could work as a replacement for the Fed. But you need to have monetary policy be independent of Congress and independent of the government, which has short-term political incentives. And instead of ending the Fed now, I just rather have hawkish-leaning Fed governors and have a bias more towards higher interest rates and lower inflation, if not slight deflation. But in an ideal world, I would end the Fed, but in the way our curve is structured, it doesn't really make sense at this stage. Do you think supply chain management offers a good return on investment? I'm not sure. Let's see. I don't know what rich BFF is, so I'm not going to comment on that. I'm not going to talk about specific stocks. How is the Fed still profitable even though they have bad assets like MBS on their balance sheets? I've heard they make income every quarter. Yeah, I mean, well, it's because that that I think it's because the interest rates that I'm not gonna I don't really I don't have a good answer. I mean, I know generally how to say it, but I want to make sure I can articulate this right. I mean, it doesn't really matter whether the central bank makes a profit or not, though, from the bigger picture of things. What websites that aren't mainstream that you regularly check on geopolitics and finance? I mean, I just follow a lot of this, the actual price action of assets. Finviz is a great source for that. I use them. Mainstream source, probably the only one I read is the Journal. I have various RSS feeds from different blogs and websites that I follow. I follow various people on X or and like yeah, and I read several books and I talk to people in the industry. I don't really have like a certain go-to website because they constantly change for various reasons. A lot of it is due to like political trends. Do you think zero commissions on trades has distributed wealth more evenly or has pushed wealth more to the top? I think it's just increased trading volume. I don't think it's necessarily has affected the distribution of wealth. It just makes people want to speculate more, and it's increased financial nihilism and more video game approach to markets. In the net, I think it's going to cause more losses for the bottom half of people who are speculating on crypto or short zero DT options or other short term things. But yeah, let's see. Can you talk about the Triffin dilemma and how it plays into the role going on today? Well, I don't think the Triffin dilemma really plays into the role at all because the Triffin dilemma is about the problems with the gold standard. And yeah, that's part of the way if they were going if they were going to try to what's it called? If Stephen Miran wanted to devalue the dollar, part of the way he could do it is peg the dollar to gold, but at a much higher price. So right now, gold's trading about 3,100 an ounce. You could peg it to say 5,000 an ounce, and that would be an effective devaluation of the dollar. So that might be a way that this relates. But Triffin limit is just the fact that the money supply is just too big for gold. The answer to that really would be allowing deflation. But the problem is public finances rely on at least a small amount of inflation to help finance deficits. So that's why like balancing the budget is so important if you want to reallocate the economy away from a debt-based economy, or not entirely eliminate a debt-based economy, but less dependent on perpetually growing debt and beyond just like the capacity of borrowers. Let's see. What do you think is the best president? Who do you think is the best president for the U.S. economy? Should we follow their policies? Like of all time, that's a good question. I mean, I think Trump's economic policies were really good during his first term. I think Reagan's policies were generally pretty good, except for his unwillingness or maybe an inability due to the fact that Democrats controlled the House most of his tenure to cut spending. I think that Grover Cleveland had good economic policies back in the day. Probably he'd be one of the more recent Democrat presidents I'd vote for. Maybe not the last one, but that that would be a example, really. I think, I mean, that's but the thing is, a lot of my general view is I don't think the president should not be getting too much involved in the economy, and they should just make the rules clear and transparent, but not really intervene. But I have a more free market perspective. Coolidge, yeah, was a good one too. He didn't really, he let, I mean, again, I'd have to go back and see like how involved he was with like the causing some of the imbalances that led to the Great Depression. But generally, I think he was probably doing pretty well. Yeah, I mean, it's more in terms of presidents for the economy. I think most of them did decent. Even Clinton, I mean, had pretty good economic policies in retrospect. But the problem really is it was more there's presidents that stand out for exceptionally bad economic policy, like LBJ, Nixon, uh, FDR, or all like notably bad economic policy. Obama, Biden, like so it's Jimmy Carter. Like there are ones that more stand out for bad economic policy than good economic policy, if you know what I mean. Let's see. What is your opinion on naked shorting? Yeah, I mean, short selling should be like I think should professional stick to professionals should only be doing it, to be quite honest. I mean, I have a lot of experience short selling, but I also am worked professionally in finance. I think the average person who's not watching the markets on a day-to-day basis and really shouldn't be doing that. It's the same with options too. That's my view on it. I think options are mostly a game that are better for professionals as well. In your opinion, did Bitcoin have a positive effect on U.S. financial literacy? It had an increase in monetary policy literacy, but outside of that, no. I think it's actually probably encouraged a lot of personal financial bad habits in terms of speculation and expectations for investments. Do you think market pricing is truly a response from the news, or much of it is quantitative positioning in the secondary market? It's a mix of things. It's a mix of sentiment shifts. It's a mix of reacting to news, and it's a mix of just positioning of big institutional players that have to reallocate for specific reasons. In general, like I like Warren Buffett's quote on this: the stock market in the short term is a voting machine, and the long term is a weighing machine. What were good economic policies during Biden and Obama's terms? Well, during Biden's term, the one good economic policy was him encouraging the banning of non-competes. A lot of companies before Biden had sort of non-compete policies that, like, if you tried to quit your job with your current employer, you weren't allowed to work at an employer of a similar industry or start a business directly competing with them. And that's kind of a violation of I think basic economic liberty. So Biden going after non-compete clauses was, I think, a positive reform. I think with Obama, I don't know if it's purely an economic policy, but I think, well, actually, yeah, getting rid of the crude export ban and not being too aggressive in banning or fighting the fracking movement in the 2010s. That helped make domestic energy production more viable in the U.S. and get rid of our structural oil trade deficit that we had versus to the OPEC countries. So that's a good thing that Obama did. So, I mean, even presidents that mostly had bad economic policies could have good things once in a while. And also, I think the Obama administration wasn't wrong for cracking down on for-profit education companies. Like these degree mills that were charging a lot, often using like GI grants or student loans to finance degrees of questionable value. So that's yeah, what's my opinion on those are my opinion on unions. I think public unions or government workers should be outright abolished. Like the problem with public unions is that you can't have fair negotiations when one side has no intent for getting a good deal. In that case, it was the government as management, because a lot of these unions are also donors, and their workers are often voters for the same people who they're negotiating against. So if you run on a platform giving a good deal to the union as a politician, that's a problem, because you're going to give the union workers an overly good deal because you don't have a fair negotiator. Even FDR, who was like the most progressive presidents in American history, was opposed public unions. So it's not just a Republican talking point. Private unions, I'm for private unions as long as they have like management is equally like vested in getting a good deal for its shareholders, and they don't use certain closed shop tactics to prevent people from working. But in general, I think private unions are fine. Well, teachers unions are public unions, so I generally oppose teachers unions, but I oppose public unions. Like if the private school teachers create a union for private school teachers, I would have no problem with it. But the problem with public school teachers unions is that they don't really have a fair opponent for negotiation. Yeah. Let's see. Thoughts on Lena's cons, aggressiveness on monopolies. I have mixed beliefs on it. I mean, I think antitrust is part of the problem. And something I think you need more antitrust to have a more competitive society. But the difficult thing with a lot of these tech companies is it's hard to prove the damage that they're doing with their monopolies. Like Apple in the App Store, it kind of makes sense because charging every vendor 30% could be kind of steep. But for other things, it's difficult. But yeah, and generally, I'm in favor of antitrust, but it's got to be handled the right way. If you're building an investment forecast for the S&P 500, what percent would you see is reasonable? Like, if you look at a full cycle, including like the great bear markets, a reasonable assumption is probably 6 to 8%. Like, the reason why you've seen double-digit numbers recently, because you haven't really had a long-lasting bear market in a long time. But yeah, and that's not investment advice, by the way. That's just kind of if you're trying to model it, that might be a good point to do. What would you argue is the best balance of income, property, sales tax that a state could have? I would favor highly in property taxes and lower for income taxes. So like a Texas model. Because I think property taxes being high discourages housing speculation and allows it to be more affordable for people who actually want to make it their permanent residence. Like the countries and the states that have the lowest property taxes also have the highest housing price multiples relative to income. And I think there should be like a carry cost. And then when it comes to income taxes, I generally don't like income taxes as a form of taxation, just because they just tax your right to exist and produce and better yourself. I mean, I think taxes should be based on consumption or decisions that you can make to choose to avoid the tax. And property tax, I think, is the most fair tax. I did a video about this back in December, because landowners benefit the most from government. The government's the one paying for the roads. They pay for the national defense. They pay for security and the police so that your property doesn't get destroyed and it maintains its value. So I think that's how I would do it. I'd lean on high on the property taxes. I would try to have zero income tax and then cover any gap with sales tax if needed. So let's see. How can the markets rise 6 to 8%, but GDP only rise 2 or 3%? Because the GDP number is real GDP, whereas nominal GDP is GDP plus inflation. So if you have GDP go up 3 and inflation be 3, that's 6% right there. And the free market helps make companies productive every year. And if you're having an economy that's getting more advanced, you should have real gains in production in the private sector. And the private sector isn't all the GDP, whereas the government is net zero or net negative. So you have to compensate for that a little bit too. So that's why the equity market returns should be higher than nominal GDP. Do you think most of the gains are due to inflation? I think a large chunk of them are due to inflation, but not all of them. Like, again, the free market creates more efficient companies, and profits naturally would go up. And then otherwise, real GDP would never grow. So it should be in line with nominal GDP. Like, and when there are sometimes deviations from that, whether it's due to taxes lowering, so that increases earnings, or asset bubbles, or other things, but on the longer enough run, in theory, and there's also share buybacks and other things that influence it too. It's complicated, but generally that's how it would line up. Are you concerned with the Christian nationalist movement and the push to theocracy from the right? I don't think the Christian nationalist movement is strong enough to really be a threat. That's my answer to it. What do you think are America's biggest flaws are compared to other OECD countries? I think that that's a good question. So let me think about that. Yeah, I mean, I think maybe its flaws is that, but it's also its strength and its weakness. The double-edged sword is America's individualism. Like, it allows us to have all the great entrepreneurship and the creative freedom that we have in this country, but at the same time, it prevents a lot of coordination and to allow people willing to make sacrifices for the greater good. So that's one thing. The other thing might be it just Americans' naivete in terms of positive outcomes from experimental ideas that have historically not worked. Like, the most recent example is being more accepting of this increased massive immigration the last several years, even though historically, if you look at other societies, that doesn't work out. But and also America not realizing it's the frontier anymore and doesn't have unlimited land or unlimited resources to have the population growth that a lot of people would want. That could be something. But also, I think that the education system is the other one. Now I got the real answer. I think America's 6 through 12 is really bad. And the public school system has a lot of problems as well. Generally, we have the best colleges. We have above average elementary school, but Americans product a bit 6 through 12. And then you also have them just in general, the post 08 entitlement culture that's really developed. But that might not just be a US thing. When the big banks got bailed out, it sent the wrong message to society that if the biggest banks, who are supposedly run by the smartest people, get a bailout, I deserve a bailout. And it's caused just a lack of accountability throughout the society and the culture, and the unwillingness to take personal responsibility, and just the lack of community. A lot of Americans are just not happy because they don't have enough friends or strong enough family ties or things like that. And that's probably an issue. But do you think grades 6 through 12 are intentionally bad? Yeah, that's something I've thought about. But the thing is that why wouldn't every other country be intentionally bad if they have the same logic too? Why is it America's is particularly worse than other developed nations? But yeah, what would I change about 6th through 12th grade? Well, if I do a few things. One, I would get rid of homework and do a reverse schooling system like Salman Khan, which is the idea that you go to class to actually do the practice problems or write the essays or do the math problems or whatever, and you watch the lectures at home on YouTube. By the time you're in 6th grade, you should have enough discipline and attention span that you'd be willing to watch an hour's worth of lectures every night for your homework. So that's I think the biggest change. I would also try to structure the school system that you can make it more gamification, in the sense that there's not a fixed like classes levels you have to do. So if you're a smarter person, you could finish school theoretically a year early and take a gap year before you go to college. Like that's another thing I think is that because not every student is at the same has the same talents. It might even be on a subject based. Like there might be somebody who's like super good at history, finishes 12th grade history by the time they're a freshman in high school, but they're not as good at math, so they have to go a little slower at that. I think we just need more customization for people's aptitudes as well, and less time in the actual school system. Like I think it's designed a lot of it as extended daycare, but I think a lot of negative social impact, particularly for neurodivergent people, um, through 6 through 12, which tries and traumatizes them for years on end. But yeah, and those are just the starts of it. Like I have a lot of gripes with the public education system. And I think there's certain subject matters that should be taught, like personal finance, like law 101, like how to navigate the legal system, um, like how like the tax system works, how like entrepreneurship works, like maybe basic coding. But now in the age of AI, it might just be like AI instead. But there's there's a those are some changes. And if I had to cut something, it'd be foreign language and maybe some English, like English in the sense of like high school English discussing various classic books. If you had to cut something, because I think again, I think digital translators and things are going to advance a lot and make foreign language learning not as valuable as it used to be. Let's see. Right. Are colleges pay to play in the aggregate? Uh, no, I don't think so. I mean, I still think there's a lot of use for university, but watch my video series. I've done a whole um, playlist of videos about the economic future of college. So if you want to watch that, go ahead. And there's my full detailed thoughts. I'm not going to really repeat those here. Let me see. What do people fail to understand about US demographics? One is that I think it's primarily an economic problem and not a social problem. Like I hear all these people, I think that the whole birth rate catastrophe, and I might do a debunking the doomer video on this, is basically a the right wing version of climate change. Like all these climate change people say, oh, the world is going to end because of climate change, because of X, Y, and Z. And I hear the same thing with the population decline. Like, oh, there's going to be no South Korean people in 200 years, or the birth rates are so low that the population is going to collapse and the world is going to end. And it's like going to be like a straight line trend. It's the same kind of catastrophic thinking that you see with climate change, you see with demographic decline. So I think they have the same role on each side of the aisle. But the thing is that where I'm not as scared about it is because I think if housing prices went low enough, the population actually declined enough, you would see it get to low enough of a level that's actually affordable. If there's a real shortage of people, wages will go up, housing prices will go down. And this could happen as soon as like the end of this decade, because a lot of the boomers are going to die and there's going to be nobody who can put up the bid to buy their houses. And people will have more kids, and it will level out at some point. It's a market signal that basically there's too much people relative to relative to demand for people. The labor is like any other commodity in that place, and the population decline is just the market kind of expressing that there's just that the living standard that people want to have. It's just not, you can't, your marginal product of your labor is not enough to be able to buy that and raise a family. And that's eventually, I think that will self-correct. I don't know what level it's going to. And then there's also the impact of AI. In the age of AI and robots, we're not going to need as many people working. And so you have this pro-natalist policy. And personally, this is against, I personally want a big family for like my own reasons, independent of this debate. But like, to encourage just people having a family just to have more people is kind of short-sighted, especially in a world where we may not need as more people, and young people may not be an asset because it might take them more and more years of education to develop enough skills to actually have a positive moral contribution of labor after all the taxes and living costs, etc. But I think I might do a separate video about that because it's a long topic. All right, so Mateus, thank you for the super chat. Do you think that switching from a US-led rules-based international order to alliance with Western countries to a transactional, multipolar, and imperialistic world order is a good deal? I think that switching, I watched my video about the liberal international order for more of my thoughts on this, but I think the deal is that I want to keep the current liberal international order, but have more countries participating in it and having a more equal weight. That like the US can't finance the global stability order all by itself. That's what I think is a lot of the implication of this. But if you have other countries help chip in a little bit more, whether it's on the defense side or a more balanced form of trade, then we can keep the peaceful stability of the current order sustainable for another generation or two. I don't think switching back to the old days where people tried to expand their borders by taking other countries is a better alternative. Let's see. Curious of why the U.S. university system has a good reputation when it's overly political and generates a lot of useless degrees. Well, I mean, when it comes to the university system, even there are still a lot of useful degrees produced by it, like whether it's in the business degrees or academic degree or like hard science degrees or economics degrees or like law school, legal degrees, professional degrees. So those are still generally well regarded. And there's some of the useless studies major thinking kind of infiltrating academia, but I think that kind of crescendoed right before this election. And based on my people I know, my personal life who are still in school, it's starting to roll back a little bit. And US schools generally just are higher quality because they have more resources to either in terms of paying professors or other things than other countries do. And because the US has been a good hub of education for so long, it's got a reputation for the top international students to still want to go there. And so that's kind of my answer to that question. But yeah, I mean, that's why it's important to study the right thing. Thoughts on an audit for Fort Knox? I think it'd be a good thing to do. I mean, I'm curious what's actually in there. I don't really think there's anything to hide. If the gold's there, you audit it. And if it's not there, it's not going to change anything because the economic realities of it not being there is probably already priced into the market and the economy. But it's just from a public transparency idea, I would generally be for it. Have you been following the Swiss economy? Any thoughts on the Swiss versus the EU economy? Well, I'm biased because I'm a Swiss person myself by heritage and citizenship. So the Swiss economy is kind of an insulated little bubble surrounded by a sea of struggle and decline. Like it's like Orange County, California compared to the rest of the state would be like if I had to make an American example. They have lower taxes, less regulatory pressure, a more flexible healthcare system, and they have a smarter voting base generally. And they are strict on things like immigration to prevent them from suffering some of the same issues of their neighbors. And since it's a small country, it only has 8 million people, it's a lot easier to manage and it's a lot easier to be decentralized, which helps them too. Is it the hard truth that China is the global superpower? No. China has their own struggles. They're just different than America's. Also, who do you think will win the Final Four games tomorrow? I think Florida will beat Auburn and Duke will beat Houston. And I still even though I think Duke's looked a lot better than I expected them to, I'm going to stick with my original pick in the bracket for the Gators on Monday, but I wouldn't be surprised if Duke pulls it out. But those are the two best teams by far left. And it's kind of a disappointing NCAA tournament. If you want to know my thoughts on that, I recommend watching my recent video about the economics of sports ball, where I did talk about this very thing, about the issues of NIL and the transfer portal, and basically how like college basketball and college football economics are changing in a way to really like devalue the sport and make it less interesting. But here's my video on that if you guys are curious. Let's see. How do I test? Daphne, I can't answer that question. The dating questions are for February only. Let's see. Do you think tariffs complete offset income on people? Like if the tariffs raise the amount of revenue they actually think it will, it could do it for people. They can offset income tax to people making less than 150K. But the probability of that happening I don't think is high. And I think a lot of these tariffs are negotiations just to lower trade barriers overall. Yeah. If the Fed expect there to be a recession, wouldn't they be lower rates, or is that how it works? Well, the Fed's more reactive. They'll lower the rates once it's known there's a recession, not the other way around. They might do a little bit, but if the Fed doesn't want to cause people to panic, for one, and two, if they lower rates too early, it's going to put pressure on inflation. So, yeah. Let's see. Thoughts on software engineering or moving into the upper class 1%. Well, with AI and LLMs, I don't think software engineering is going to be the path anymore to moving to the 1%, unless if you are starting a business and they're the coder partner. I did a whole video about this, where San Francisco is the next Detroit. And I did an interview with Chris Street about software engineers becoming a minimum wage job. This was before ChatGPT came out, and how coders are paid much lower in other developed countries than the US. So that's my take on it. Like, I think it could be a useful skill to know, like the basics of, so that like if AI is building your software for you, that you know that they're doing the right job. But that industry is in flux, and you see with the tech employment what's going on there, that it could be risky. What do you think about private equity buying physician-owned practices or consolidation at large? Some of these industries are tougher to consolidate than people think. So I'm not sure how much of these are going to work, but yeah, if it's more efficient to run these medical practices on large scale, then it makes sense for private equity to get involved. I haven't ran the numbers on it to see strongly whether that's true or not, but apparently the buyers believe they are. What profession do you think will bring you the 1%? Entrepreneurship. That's the one that's the most likely to do it. And you just got to build the skills in the meantime. Pick a profession you actually enjoy doing, that you don't mind waking up every day to be a part of, and learn the skills, build the connections, and figure out where the need for a new business in that industry is. And then you fill that need. That's really simple. That's the simple. It's simple, but it's not easy. What are your thoughts on Richard Wolff as an economist? I recognize the name, but I can't match him to anything. So I'm not really sure what his philosophy is, but the name sounds familiar. If you are a health professional, do you recommend ownership then? I mean, again, I don't know the economics and the cost structure of being a doctor now. I know my grandfather was one, and he warned me not to go into that profession because of malpractice costs and the risk of it being ultimately socialized by the government. But if you can, it really depends. Like, is the cost structure of the practice viable enough that you can, and could you scale your practice that you can have junior doctors or physician assistants or be able to help you to build a practice beyond yourself. Again, it's a niche situation. If you want to have a longer conversation about it, contact me directly, I think I need to do some research for having a good answer. Let's see. Graduating the mechanical engineering degree is now in the next few years a good time to start up a business. Recessions actually oftentimes are good times to start a business because you can get employees at relatively lower cost because there are more of them available, and probably people who are at higher levels of qualifications that you'd be able to hire at good times. Things like office space can be cheaper, and like there might be, it depends. Like if it's B2C, you might have a little less consumer demand, but it takes time to ramp up a business anyway. And if you're at the very beginning, like building your initial following it can happen during a recession. Scaling is harder to do during a recession. So once you've already got some traction, you've got some VC money and you want to like blow up, yeah, it's better for good times for that. But at the beginning, a recession can actually be favorable because it can help lower your cost structure and also lowers the opportunity cost of starting a business versus having a higher salary job. Thoughts on Peter Zehan's perspective on the collapsing Chinese demographic CCP collapse? Thanks again for the stream. I think it's interesting. I've read his book. I think that he's right about the general direction, but wrong about the magnitude. I think things like demographics, where it's more telegraphed and people can see it out, it's, I think, easier to adjust. But yeah, I think he's right about the direction, wrong about the magnitude, to keep it short. Thoughts on Gary's economics? You're the second guy who's asked me about Gary. Maybe I should reach out to Gary and do a live stream with him or some sort of video, maybe collaboration. But I'm generally against wealth taxes. They encourage people to just move their money out of the country, unless if you do it completely global, or they will encourage people to move artificially up the risk curve and put their capital at risk to just minimize that tax. Or if your wealth is primarily in private assets, like your own business you started, what are you going to do? Sell 1% of your company every year to pay it? And that compounds year over year. And eventually it can cause like people to lose their assets. And like people will say, oh, that's the same as like paying an advisor. Well, at least an advisor is helping you get returns to compensate for it. The government is not helping you get returns to compensate for a wealth tax. I think a lot of this wealth tax stuff is, and a lot of even income tax, I think are poor ways to tax because they reward, they disencourage like economically productive behavior. But on top of that, I think the whole point of them isn't even about revenue efficient because they're not revenue efficient. The point of them is to foment, is to class envy and to try to like, hey, look, we want to soak the rich because they deserve it. And I don't think anybody should be allowed to make more money than me. That's not maybe what they say publicly, but I think that's privately a lot of the mentality of these people who advocate for extremely high income taxes and wealth taxes. Because with the wealthy who do that, either are old money who's inherited their wealth and don't care, or they found a way to work around it. But again, I might be biased because from the perspective of a small business owner, but those are my takes on it. Yeah. Let's see. Do you think the ultra wealthy create inheritance tax to force normal people to liquidate family businesses? Watch my video, Old Money Supports the Left. I go into the logic of it. It's mainly they would mainly do to prevent newer money from coming in to compete and take their slots. Really, that's where it explains high income taxes. Inheritance tax, I don't think the wealthy generally are for inheritance tax. They're against it because unless if they could find a way to grandfather themselves out of it, because inheritance tax is a part of the reason why a lot of families' wealth doesn't last past certain generations. Yeah. I mean, tariffs actually might be a good opportunity to start a manufacturing business, especially if you have a way to automate the manufacturing and make it cost effective. Like, there's a lot of room to bring in like automated factories. That's in this country. So yeah, it might be a good idea. Generally, I dislike commentary format videos, but I'd love to see you take a reaction to left-wing economic videos that have been cropping up, millions of views lately. I mean, I used to do reaction videos when I first started this channel. In fact, I got from like 0 to 300 subscribers because of reactions to What If Alt Hissed. But as the channel's grown, I realized I'd rather just have my own original ideas and not have to rely on reaction videos. It's just, I don't enjoy making them, and it's very hard to do them with good sound quality and production quality. And yeah, I mean, I thought about doing one for second thought, but I just haven't had, and I have too many original ideas to do. Like, if I wanted to do like discussions about left-wing YouTubers, I'd actually just like to talk to them directly, whether on my channel or theirs, and have a conversation. I think that would be more interesting because like I can react and stuff, but I'd like to see how they would react to the way I react. What role does religion play in social cohesion? And what extent does the West retain Christian values? I mean, it depends on the country, to be honest. And what part of Christian values. I think there's a good book on this called Dominion by Tom Holland, which goes into even countries that are nominally more atheist, how they've like inherited an inherently Christian worldview. Like the biggest one is the idea of equality. Like the idea of equality, whether it's democracy or even socialism to a certain degree, is the idea that everybody is equal under the eyes of God. That's a very Christian idea. In non-Christian societies, the value of a person is based on their relative social status and power or spirituality or other variables. Like, but the idea that every human life has equal value and that God has a value of you for just existing is a very Christian concept. The idea of so that's kind of an example, but I think really the best capitalist markets are ones that have religion as some sort of moral force to encourage people in the business world and buyers and sellers to do the right thing without the threat of the state forcing them to do it. And it helps with social trust. Like a high trust free market is probably the most prosperous form of a society. And I think religion helps with having a high trust society, especially if people agree on some certain core things of right and wrong. Yeah, if somebody in their mid-30s was going to receive a large seven-digit windfall with no prior wealth experience, what would you suggest for a good stewardship? Well, I mean, I would recommend, especially if you have no experience in finance or managing money, I recommend reaching out to a wealth advisor and a CPA. You have a CPA for the taxes and a wealth advisor to help you with the investment side of things, and a state attorney too to construct a good will. Because a lot of people, even if they're good at managing their own money in their lifetime, a lot of it gets destroyed by poor estate planning and fights over the siblings. Have you seen Asian Nometry's videos on how Japan ate the rich? No, I've not, but I'll give it a watch. Have you read A Secular Age? No, I have not, but I'll check it out. Why is gold not following if we're in a deflationary environment? Well, gold has a lot of central bank buying, and there's various reasons why central banks want to buy gold, but central bank inflows have been the main reason why gold is held up. And also the relative weakness in cryptocurrency, I think, helps gold because those are kind of directly competing assets. Like the anti-fiat trade, people either express it through buying gold or they express it through buying cryptocurrency. Are you personally religious? I mean, yes, I'm a practicing Catholic, and I thought about doing for the April iceberg around Good Friday one about like Catholicism and economics or religion and economics, and I might actually do some videos about how Vatican finances work, how old money connects with the Catholic Church, how what distributionism and other like quote unquote Catholic forms of economics are. I'm not sure if that's too religious for the audience or people would be interested in that. If you think that'd be interesting, please leave it in the comments. But those are topics I've explored doing. And now that we're close to Easter, it's probably the right time for me to like release some of those videos. Do you think the US is the best place to become extremely wealthy from nothing or median wealth? What would be good over the decades as signs this might be changing? Yes, I do think it is. I think the combination of just a culture that doesn't shame you from entrepreneurship, relatively generous bankruptcy laws, and for middle class people at least, relatively low income taxes, and relatively low cost of living compared to other developed countries, especially in middle America, it makes it an appealing place if you're trying to build from nothing and start a business. Like retiring might be a different story. The thing that would change is that if the government adopted a role more like a European country in America, and we had structurally higher taxes, not just for the very top brackets, but across the spectrum like they do in Europe, and you just had a larger welfare state. That would, if it was more of a European economic structure, I would change my mind. Or if just social tensions got so bad due to just like lack of social cooperation and trust being eliminated, or some other country changes its regulatory forces to be more competitive. But I think the US also has the biggest market to sell to. It also is a country that speaks English, which is the global language. It also helps expand globally. So I think there's still a lot of good things when it comes to, when it comes to that. But yeah, I still think America's still the best place if you're trying. Like if you want a more comfortable middle class life, you might be better off in Europe or in Singapore or other developed countries. Like the developed Northeast Asian countries like China, Japan, and Korea have too many cultural barriers for foreigners, really. But like those other countries, I think are better. Like if you're just okay with a decent quality of life, but you don't really want to really strive to get ahead. Like the US is not a good place to be for people with more modest ambition. Like you either going to go for it all or die trying in the US. And if you want a more relaxed pace, I think other developed countries are better. Yeah. What's it called? What are your most heterodox opinions? Well, an iceberg of economics, and I will post really the video about this where I went into it more, because the last video in the iceberg of economics series, I talked about some of my most heterodox ideas. Like one of them, I think that moral decay is a product that, because living a more degenerate lifestyle is more financially affordable than living a more traditional, family-oriented, responsible lifestyle. That's probably one of them. I think that economic forces drive more social change, and then social change drives the economy. That's probably a more heterodox view that I have. I'll get to that. Let me just load up my iceberg of economics playlist and find, because on the chapters on that, I have the note for my more heterodox views on things. And I'm going to post the video here. That's called The Craziest Economic Theories on YouTube, where I go into more of these kind of things. All right, so here they are. I think prosperity theory, the idea that people's voting patterns change with the economic prosperity. Usually the more prosperous something is, the more left-wing people become in that city. And then when things get hard, they switch to more conservative politics. I think there's an automation ladder pull, which means that young demographics aren't necessarily a good thing anymore. That's my biggest one, is the demographic one. I don't think inherently and then the other idea is that the last 24 years were probably a dark age in the US from 2001 to 2024, because we basically had to use debt or social welfare to compensate for people's lack of productivity since the 1990s. And that, you have digital apps and technology trying to replace the social system. And I don't think it's really economic growth, for example, if you pay an Uber to go to the airport versus having your family member do it for you, or paying a therapist versus having friends and family to talk to. Those are probably my more extreme economic, like heterodox views. But here is a video if you want to know thoughts on the FIRE movement. The FIRE movement can work if you don't want to have a family. Like if you have children, forget about the FIRE movement. And it's also the assumption that you have very generous expectations for S&P 500 returns, and that the S&P will consistently outperform other asset classes, which I think is a flawed assumption. You have a unique take on videos. Please do the economics of Catholicism. Do you think the political right is too subject to populist or anti-capitalist ideas? Reaction to corporate systems. Yeah, I've seen that. I've read some of these populist pinkers on X, and like their responses are kind of crazy. I read this one that basically said, nobody in my family who voted for Trump owns stocks. For all the rich Democrats panicking today, you must know how it felt when Jimmy Carter destroyed trucking jobs and Bill Clinton signed NAFTA. A lot of people think that tariff's supposed to just be revenge against the rich liberals in the world. I think that's kind of not the right way to really look at things. And yeah, so like you have to be able to adapt to competing economic forces. And that's maybe the struggle with the modern economy is the minimum level of education and skills to have a certain quality of life ratchets up with every advancement of technology, making more things more efficient. And I don't really know the answer of how to deal with that, but I don't think resorting to economic populism, like people would argue Peronism originally started as a right-wing ideology, but then as it got more popular support from unions and economic populism started to become more dominant in that strain, it kind of caused Argentina to struggle for 50 years. So yeah, Argentina is the risk really of economic populism getting out of control, and other Latin American countries too. So let's see. Do you think wealth inequality is what blew up Russia's trajectory in the early 20th century? No, I don't think so. I think it was more just the fact that they had bad leadership under the czars, and they shouldn't, and they couldn't really have they got humiliated in the Russo-Japanese War, and they didn't really have like the resources and the political will to maintain a fight in World War One. I think getting involved in World War One was kind of the death knell for Russia, essentially. And if they somehow were able to either win the war before Lenin came in, or were able to not get involved in the First World War, Russia may have become a much more industrialized country and a much different trajectory. What impact do you think IQ levels have on a country's success? Yeah, I mean, it's really a complicated one. But I don't really I think when it comes to that, it also depends on why those IQs are low. Their Flynn effect plays a variable in that it's not just migration. And also a lot of migration is coming from East Asia, which is high, at least in the US, which is high IQ. So, and there's selection bias on who you bring in. Like a lot of like the countries, if you're bringing in like the skilled populations from these countries, it shouldn't have a negative effect of IQ no matter what country is. Where if you're bringing the unskilled and the lower intelligence bracket of that country, even if it's the highest IQ country in the world, it can be a negative. So it's a really complicated question. Yeah. Let's see. What is the craziest conspiracy theory that I believe in? That's a good one, because I generally am a skeptic on conspiracy theories. My favorite conspiracy theory, but I don't believe in it, is phantom time. Maybe the idea that a lot of sporting events might be fixed for various reasons, particularly like the NFL playoffs. I think there's a lot more match fixing in professional sports, and than what is than what is expected. That would be, if I had to say if a conspiracy theory is true, that would be it. But I generally am a skeptic of most conspiracy theories. What does the market dropping affect the most? I'd say people who are about to retire who didn't transition to fixed income or lower their risks. So if you're somebody who's like in their 70s who went all in on aggressive tech stocks, you're probably hurting the most. It's going to delay your retirement. I mean, the rich will be affected, but if they're sufficiently diversified, they'll still be okay. They'll just maybe a little less rich. But it's just people who didn't manage or poorly manage their portfolios, really generally, are the most at risk. Or people who's a business owner in an industry that's particularly at risk, like a smaller business owner whose business is going to get disrupted by the change in the economic order. Do you think software jobs are going to continue to be outsourced? Yeah, unless if there's some sort of like service on tariffs, I don't see why offshoring will not continue. Do you think that the 25% tariffs on autos on all countries is sustainable? No, it's not. And it goes back to this old idea that the Detroit factory workers deserve to have lifetime job stability. It's not really logical. How long do you think the recovery will take? Like, you mean like for the markets or the economy? I mean, the rule of thumb is usually recovery takes twice as long as the decline did. I mean, sometimes it's faster, sometimes it's slower, but yeah. And we don't know how long this is going to last, so I can't tell you what 2x of this is going to be. Let's see if I missed anything. I'm not familiar with Balaji Srinivasan. You guys give me a lot of good material for things to look at. How about personal credit in there? What do you mean for personal credit in there? I missed the context of that. In regards to windfall management, how do you pick a CPA or a wealth manager? Usually within your referral network. Yeah, I mean, I'm a wealth manager myself, so I'm a little bit biased on that one. So I can't, but generally the way that people pick these is in their referral networks and people who they know and trust and they want to talk to about this thing. And there's certain things you can look at in terms of like how their payout structures are, or like what their investment philosophies are, or like and when it comes to a wealth manager at least. And if you got to find somebody whose philosophy kind of lines up with yours, or you think will execute things in the way like some people want to be more self-directed with their trading, and other some wealth managers aren't really interested in doing that. They want to rather, and others who want to trust the wealth manager to do everything. There's different types of personality. It's a personality fits the other variable too. But yeah. Let's see. I want to see if I missed anything. Although, if you are a good marketer, extremely organized and disciplined, you go into business yourself. Yeah, I think sales and marketing are the underrated skill when it comes to business. Like, you can create the greatest product ever, but if people don't know who you are or don't understand the value proposition of it, you're going to have a hard time growing. What do you think Warren Buffett will do with his cash pile? I don't know. When the stock market goes low enough, or specific companies gets low enough that he finds attractive, he'll buy stuff on the dip. Or if it doesn't happen before he dies, he might just the people who run Berkshire after he passes will find something to do with it. I mean, that's my guess. Like if he just completely gives up and says there's nothing of value anymore, he could distribute the cash back to shareholders, but I think that's highly, highly unlikely. Best way to create social cohesion in the U.S., I think, is creating more economic opportunity, especially for the bottom 50%, and more equal access to high quality education. I'm not saying like free college or anything like that, but like, for example, you should have increased capacity at schools like the Ivy Leagues so that like somebody can get in there. If you have a certain merit qualifications, you could get in, and it doesn't feel like an old boys club that just locks out a lot of potential upstarts in favor of the elites. So I just think I think increasing accessibility and opportunity for people is the best way. And like, I mean, also just having some sort of consensus on right and wrong, which historically has been done by religion. But in the age of the internet, where people can find confirming biased opinions, it's hard to do that. So I think the internet is a good thing to is a challenge to social cohesion, and it's an underrated challenge to social cohesion. How would you spend $300 billion? Like, are you referring to Warren Buffett's cash pile on that from an investment perspective, or just a consumption perspective? Like, I'd probably retire well before getting to that level. But let's just say if I had and I'm not going to get into specific investments because that's just kind of the rules for these live streams. So I'm not going to talk about specific, but I'd allocate it in a mix of real estate, stocks, both US and international. I probably would internationally diversify the real estate portfolio and then buy enough bonds at least to provide me the income that I want to live day-to-day basis. But yeah, I mean, in terms of specifics though, beyond that, I'm not going to go into it. Let's see. So do you think, I mean, so this question about computer science is doomed, and what should I major for job stability? You can't really think about it because you don't know what industries are going to get disrupted and which ones aren't. Like, you just should avoid something that obviously is not going to provide a job, like a studies major. But beyond that, like, given like there's so much of technology and the economy is at flux, you should study something that's interesting, that interests you personally, that has some sort of path to monetization. But beyond that, I'm not going to really get into specifics for major. I think that it's economics incentivizing morality. No, it's just that immorality has become more affordable. And like the cost of, like, for example, getting married, buying a house, having kids, paying for college, and the other responsible decisions has gone up a lot more in price, whereas the price of vices has declined adjusted for inflation. And the market is indirectly, therefore, incentivizing certain behaviors. Let's see. What's it called? Do you have an opinion on Buffett's successor, Grave Abel? No, I do not. I don't really know enough about him to comment publicly. Yeah. Is the next step to cut income taxes for bottom earners? Yeah, if you're going to do the equivalent of, well, the thing is, if assuming there was not, the problem is that the U.S. had such a large deficit going into this whole tariffs, and the previous trajectory was just unsustainable. And so as a result, what's it called? You have like, we've already, it's hard to cut taxes at this point when you need to get the deficit in half at least to be sustainable. Like, I would only be like, you have to cut spending a lot more. If we say, for example, if there was a more balanced budget for the government, then yeah, I would cut taxes across the board the same revenue impact that tariffs would have. And you ideally would swap those as sources of revenue, but maybe you do 50% of them, because I think any expectations of revenue for the tariffs will probably be half of whatever it's claimed to be, because of people will work around them. But the current state of our deficit, it's difficult. And we had a tough choice. Like, this election was basically an election between either paying this deficit through tariffs or paying this deficit through, and not even completely, just partially, just to be transparent here, or to pay it through increasing income taxes, increasing corporate taxes, and allowing a higher level of inflation. Like, there was no way out of that pain. Like, it's kind of picking between a rock and a hard place when it comes to tariffs or higher income taxes. And the bottom earners don't even pay that much income tax. Like, most of the bulk of income taxes in this country are paid for by people who make more than $150,000 a year. That's why it's viable to have proposals to get rid of taxes for those people outright, just because, like, the relative contribution of taxpayers is so skewed to the right. And it's even more extreme in places like California, where it's like over 40% of California's public finances are like based on capital gains from technology companies. And I did a good videos with Chris Street about that if you want to know more good details. Yeah. And then thoughts on Russia. They're kind of an autarkist society. I've never really been a fan of Russia from an investment perspective, because they're difficult for foreign investors to trust. Yeah. I mean, it's probably better for the world and better for them just to come up with some sort of peace deal in Ukraine. But I don't really have any opinions really to say on them other than that. And have you changed your mind on anything interesting recently? That's a good question. It depends on what you mean by recently. But like, I changed my view a couple of years ago on the death penalty. That's the most recent one. I've kind of flipped on it. And also I've always changed my views every day on certain things in the financial markets, because as the markets change, my opinions change on certain asset classes. But yeah, I can't really think of anything in the last 12 months that's like worth discussing. Let's see. If bonds are producing less than real inflation, some retiring at 70 and living to 100 may be in huge trouble. Well, yeah, that's why you won't put 100% of your portfolio in bonds. Well, it depends on the bonds too. Like, different yield environments, you can get positive real. So like, people who invested in a bond portfolio in 2020, yeah, when rates were at record lows, yeah, they're in real trouble. But in other periods, you might be just fine. But I'm not going to get into specific advice on that. And you talk about your educational life journey to working on finance. I've talked about this before. I mean, my grandparents taught me how to trade when I was a kid. And then I did virtual trading, a little bit of real money stuff in high school and college. I worked under an internship under a hedge fund manager and family office in college, studied economics at university. Worked in finance professionally at various different funds and as a research analyst mostly, and a portfolio manager. And and read a lot of books about the subject. I'm always curious about how money works and why things move around the way they do. And I got into this industry because I learned that I could do it for others for a living instead of waiting until I had a big nest egg when I'm 60 and trading. Yeah. Do you have specific strategies to ensure the wealth you pass for your family is maintained for multiple generations and not squandered? That's more of an estate attorney thing, is building a trust. I think financial education, though, is very important. But I think the biggest thing is making sure that if you have 3 or more kids, that they all get along fairly well enough, or you structure the trust that they can't have any wiggle room to litigate it. But yeah, I agree that financial education is critical. But yeah, that's more of an estate planning attorney's thing. But in terms of growing the wealth, like to a certain level that your heirs will inherit as much as they can, I can help you with that. But in terms of specific like trust structures, that's more of a legal thing. Let's see. How good you are at chess? I was a competitive chess player in the 4th and 5th grade here in Orange County. I competed in local tournaments at my school and other places and used to play the random hustlers on the beach back in the day. And as I've gotten older, I just have had less time for chess and I don't play nearly as much. I'm probably still an above average player, but not a grandmaster or anything close. Strategy board games are one of my favorite hobbies generally, but I've moved on to other ones. And I don't like online chess because it leaves too much room to cheat, especially in the era of AI. Do you have any reflections on the economic or social impacts of the changes of gender roles and norms? I think that economic changes change the gender roles more than the other way around. Again, that's kind of more in the Valentine's Day special level of topics, so I'm not going to dive too much. I might do a video about women and careers and economics with some of my female colleagues at Spearhead, but I haven't really, and other women I know who've managed to balance it fairly well in the financial industry and others, but I don't know if there's enough demand for that on this channel. Let's see. If the stock market keeps going down, do you think the Fed or Trump will react first? The stock market's not the reaction function for the Fed. So by default, it's more likely Trump. But I think the Fed would react if it actually shows in like real economic recession. Any thoughts on Palantir? No, I'm not going to comment on single stocks. Favorite current use of AI? I use it for my thumbnails and for descriptions sometimes for the channel. I use it for research, but I always have to verify it externally. I use AI every day as part of my workflow. It's become a value. It's allowed me to become a lot more efficient and productive. And if it wasn't, and editing, probably the best one is AI editing. It helps me make all the cuts and it gets sound a lot more cleaner. Sometimes it's not perfect, so sometimes that's why you see some weird cuts in my videos, but the amount of time it saved me on the production and editing side has been a lifesaver. So I would say that. What are your favorite strategy board games? Diplomacy is probably my favorite one. If you've heard of it, you know the intrigue involved. I like Stratego a lot. I like chess. I like Ticket to Ride. I like Acquire. I like things that, or Yacht Race is more obscure, but I like that one too. You've got what's it called? Those are my favorites generally, but Diplomacy is probably my single favorite. I've actually competed in tournaments for Diplomacy back when I was in college. Let's see. Can you do the Mother's Day special for women? Maybe I could release it then. I'm actually going to be in New York for the fan meetup for Mother's Day. So, if the day before we're having our meetup in New York City. So if you want to see me in person in New York that weekend, I will be around. And then I'm just in general going to be traveling quite a bit for the tour over the next few months in the US and in Europe, places like Chicago, Seattle, Dallas, Houston, Austin, San Francisco Bay Area, Switzerland, Amsterdam. And actually, I have a new announcement. In February, I will be going most likely to Brisbane, Australia. And if it's more for personal reasons, but I might as well do a fan meetup for the Aussies when I will be out there. Let's see. Favorite country to play as Diplomacy? I like France. That's probably the basic answer, but you can get the Iberian Peninsula pretty quick to have a strong foundation. And it's probably my favorite country to play as. I think Turkey is a good one to play on in the East, as long as you don't have like hostile neighbors who want to pin you in. Like if you allow Turkey to grow the first 2 or 3 calendar years, then it's just as threatening as France. And those are probably the two countries I like to play with the most. Germany has the most risk upside downside all in risk reward country. What's it called? And the one I don't like playing as is Italy. Like if Austria-Hungary, I know is hard and you're most likely to lose, but like Italy, you can just get stuck and it could just be a grind. Like you're not gonna win, but like you're also not going to be able to really do anything and not be a real player on the board if you don't manage to take out Austria or Turkey early. So Italy is probably my least favorite country to play as in diplomacy. Do you use sauna? Your skin is solid. Thank you. I mean, I like to take jacuzzis and swim, but I'm not really much of a sauna guy. Let's see. And if you guys want to learn about diplomacy, there's a good YouTube channel called Florida Man Diplomacy that goes into the rules and how to play it. Yeah, you definitely need to use the convoys for Italy. Do you agree that Bill Gates' statement that medical doctors will be obsolete in 10 years? Absolutely not. Like, I don't think people are going to trust a robot with life or death decisions. I mean, I think AIs will help speed up diagnostics, and you probably need have one doctor be able to do the same work as maybe 5 or 10 doctors even. But yeah, and no, diplomacy is not risk. There's no roll of dice and luck, and everybody has a relatively even amount of pieces at the beginning. It's like foreign policy in a board game. So if you want to pretend to be your inner Henry Kissinger or Antony Blinken or Marco Rubio, go and play diplomacy. It's actually supposedly Henry Kissinger's favorite board game. It's a lot like of negotiation with people in the room with you, and you got to book like 6 hours to play it. I used to do nights with my friends in college, and I do them occasionally with local friends here. But yeah, it's a great game. I mean, I would actually live stream a diplomacy game with my friends if people actually would watch it. But that's it. Would you fully vaccinate your children? I have to do research on each of the vaccines, but I would still probably mostly use all the vaccines, but I might spread the pace of them. Like if there's if you, that might be the way to do it. But I mean, I don't really like this idea of like all vaccines are bad. I mean, I think most of them work fairly effectively, but the ones that don't have enough of a track record, that's a different story. But that's what the FDA process is for. Yeah, and then all right, let's see. Do I have any? Let me check if I have any other questions. I'm getting tired. I might wrap this up soon. The other thing I want to ask, since I have a large audience here, it might be a little different from the last one, is what do you think of me doing a series about various boom times in economic history? Like, you know how people explain like the Great Depression and what caused that, but you never hear about what caused the good times. Like, why are the 90s particularly successful, or the 80s, or the 2000s? That's something, if you think, or like the 1950s or the 20s, or in other countries like China from 79 to 2007, or England in the 90s, or Japan in the 80s. If that's an interesting topic, I think I'm going to make a series about that. I mean, I don't know if you've probably seen those YouTube shorts of like those retro videos of like different toys or pop culture or video games from the 90s. As somebody whose childhood was in the 90s, it kind of made me really think about a lot of that stuff. And I'm like, why were the 90s so good? Was it just vibes and feelings? And I looked into the economic data, and there's actually a lot of stuff that happened that made, and the performance was actually legitimately that much better. And I'm going to try to put into numbers, into common sense, why that actually was the case. And yeah, and that's why a lot of my opinion, this is my heterodox opinion, I'll wrap this up with, is that, you know why a lot of millennials and Gen Zers are very cynical about the economy? And the reason is because a lot of them Like anybody born before 1980 or even before an 85 doesn't have a living memory of like in their adult life at least of a good economy. Like I'm old enough that I remember the 90s as a child. So I guess I'm aging myself a little bit. Like my whole childhood was basically in the 1990s. But but by the time I graduated from college, it was already after the GFC and the economy's had some good parts and there's been some growth, but it wasn't the same dynamism as the 90s or the 80s. So like it makes and a lot of people are underperforming their parents because their parents' formative years were during more prosperous eras like the 80s and the 90s. And so maybe that explains a lot of the dissatisfaction of younger generations because they don't know what good times are like. And they just think that what is normal, which I think is a dark age in the economy, is just what normal is. And so if like let's say like the structural economic reforms with the tariffs and just in general demographic variables and other economic factors, I think might lead to a boom time in the 2030s. People aren't going to be used to what it's like to be good. Like it's going to be crazy. People aren't going to be like that could be something that happens. And so, yeah, anybody who started their working life after the GFC, like me, doesn't have that kind of experience. I mean, it's frustrating because millennials particularly live their childhood when it was probably the best time to be alive from in terms of living standards, whereas their adult life was a much more difficult economic time relatively. And that kind of cognitive dissonance, I think, causes a lot of the frustration in society. So, yeah. With that, and also the video for thoughts on gambling, I watched my video about financial nihilism. I'm generally think that gambling has gotten way too normalized generally. And then I'll see if there's any other things before I wrap this up. Yeah, I think I'm just going to wrap it up here. But thank you guys for watching. Here's the link to the tour if you guys want. You could also vote for future destinations on a thing in my destination, the survey form in this description. But yeah, I'm kind of tired of losing my voice, and I got a presentation I need to do live here tomorrow. So I just want to do this last minute one just because of the tariffs and how the shocks are. So I thought it'd be relevant to do a live. But yeah, have a good night, everybody.